Hi guys, this is just a quick little video about the importance of keeping a trade journal. So if you're already trading or going to start trading, it's very important to keep a record of all your trades. Your broker will keep a record of your trades and you can put up all sorts of statistics from it. But it's important, I feel, to have your own trading journal. Now, whether you have one like this is an Excel spreadsheet, whether you do it old school by hand and write it out, it's really important you keep a record and don't let just trades run away from you. You know, you're clicking on the button, you're trading away, and you're not writing them down. And what tends to happen is you're only seeing the most recent trades. For example, if you lose or you win, and you're only seeing that and you're not seeing the whole picture. So, spoiler alert, this isn't the most exciting of videos, but it's an important one. You know, it forms the foundation of successful trading. So here on the screen here, we've just got a simple little Excel spreadsheet. And simply, I'll just go over it quite quickly. You just simply write your trades down here. So this you do manually, so it's pound US. The date. Oh, and by the way, these aren't my actual figures, okay? It's just examples, just to show you how I do record my trades, but they're not my actual trades. Even though, as you'll see in a minute, it's not a bad record. But anyway, I digress. So we've got the date here, and then you put in whether you're going to buy or sell. So whether you go long or short. So you can see we've got two main categories. We've got the entry and exit. So we start with the entry, the date. I bought. This is the price. You put that in. And then in here, I'd put the date for when I exit. So that hasn't been filled in, but I put the date for when I exit. And then obviously if I bought then I put sell here. And then I also put the price in. Now the clever bit here is once you put the formula in, this is the formula here. Okay. It will work out the difference between these two prices to give you the number of pips. The greens means that you've made money, and the reds, they're negative. So that means you've lost money. In here, you put, now, this is where it gets a bit different because I actually work with IG. I'm in the UK, and it's actually pound per pip I work in. Now, a lot of you guys will be working in lots, or if you're doing traditional forex trading, you'll be working in lots. So here, instead of putting pound per pip, you'd probably put in your lot where it's a standard or mini lot, whatever lot you're using. I admit I'm no expert on lots, but you need to obviously put down obviously what you're risking. But if we just carry on here, so for example, we've got the pound per pip, it's 6, and it's 14.8. So here we've got the formula there, and it works it out for you. It's £88.80, and that's gone green because it's a profit. You manually put in W or an L, so it's a win from W. You put in your stop, okay? So what stop you want to put, whatever stop it is. As I say, these figures here aren't recommendations of what stops you should be putting in or risk. They're just random figures. What happens is you've got the formula there which works out the stop. Okay, so the stop is obviously you put the stop in there and it works out the difference between that. So we went in, for example, bought at 12,618. The stop is 12,608.3. So it works out. This works out here. The formula that you've got a 10 pip stop. Now, I'm not saying that's what you should have. This is just an example, simple example for you to work out, okay? And then it works out the risk. So this formula here works out the risk. So 10 times the £6 per pip is £60 risk, okay? And that would be whatever lot you're risking. So you'd have your lot there instead. And then your stop and difference. And then obviously it would work out obviously how much you're risking. Okay, so it's slightly different if you're working in lots, and obviously to work out your stop and how much you're risking would be slightly different. As I say, I'm just doing this pound per pip because I trade with IG in the UK, so it's pound per pip, so slightly different spread trading. So there's that one, and then you can see the next one down was a loss, bought at 12,662.5. I say these are just examples, they're not real trades. Sell 12. And you see it's come up red -10, it was 6. And you can change in here, obviously, if you're doing pound per pip, how much pound per pip you want. But really, the only things you have to enter are obviously your trade, the date, whether you're buying or sell, the price, but the actual number of pips, and obviously the pound per pip, but the actual pips, profit, you have to enter the win or lose, enter the stop. Then all the difference, the risk, the profit, number of pips, that's all already worked out for you. But the important bit is down here. So when you put in the W or the L, this is what's important. It then with this formula gives you how many winners. So for example, in this example, it was winners 10. This formula works out losers were 11 and total trades are 21. And it works it out for you. So it says the win rate is 48%. Now, I'd say these are just examples. They're not real trades. But you can see even with 48%, obviously the pip numbers are varied. Sometimes it's £7 per pip, £9 per pip, £6, £10 per pip. They all vary. This gives you your average, so how many pips you've overall, which works out the losing ones and the winning ones, and then it works out how many your net number of pips. That's 40.5. This is your actual net pound per pip, so it works out the average. And then this is the important bit, it's gone green, so it's £404.90. Okay, that's off 21 trades, and even though it's only a 48% win rate, it's still up. And that's what I explained in my other videos. My average is 50, maybe, well, probably 50, 60, maybe 50 to 60% win rate, but you don't need an 80% win rate. And this is a good thing about trading journals. By keeping a trading journal, you can clearly see, how you're doing, what your win rate is. The same, my broker actually does it anyway, IG, on Trade Analytics. It lets me see, it does a history of my trades. I can pull up my win rates and everything else, and that does it all for me. I think it's important to have your own one, because what happens is when you're trading, you tend to trade, you press the buttons and that, and then you don't really go into your Trade Analytics or look. And then sometimes you even forget to write it down. And it's good to take time out, whether you do it daily or weekly, like weekly now, because the markets aren't open. You can look back on the week and plan for the following week. Or again, it's a lot easier if you do it daily. I mean, even I slip up and leave it too long sometimes, and you're a long time filling in. And what happens is, if you have a couple of really bad losing trades, you think, oh my word, I've just, it's just not going my way. The strategy's just not working. I'm really down at the moment. But when you come and look and you see, well, overall, for these 21 trades, I'm actually up £440.90, then it's not so bad after all, because look here, we had a couple of losers there. 1, 2, 3, 4 losing trades. And I'm probably looking at the last recent trade. I think that's another loser. But then we get a couple of nice winners, 135, 135 yet again we got through. So it just gives you that bigger picture overview that, in fact, you're not doing too bad after all. And I'm doing okay. So it gives you that, as I say, that overall picture. You can quickly look at it at a glance, and you're not just letting trades get away with you. You're not just pressing the button and quickly And you can use this for day trades, swing trades, whatever trades you're doing, and you can make it as detailed as you want. So, for example, you can put the times you enter trades in, your reasons for doing the trade. You can add all sorts of figures and that, but whatever you do, even if it's just a basic chart like this, or even if you just hand write it out, you want to know when you took the trade, okay, when you write it out by hand, whether you bought or sold, what the price was, how many pips or what lot you're using, and then whether it wins or lose, you've got to write that down afterwards. Results are really important. Obviously what your stop was, what your risk is very important as well, risk management, and whether you won or lost, what the profits were. And then you can look back, and maybe the reason as well, and you can think, well, I shouldn't have gone there, I should have done, what your mindset was. And it's a really helpful tool. Otherwise, you're just clicking away on a button, you're trading, and it's just gone off into the ether somewhere, and you're not really treating it as a business. So yeah, that's my advice. Whatever journal you use, I mean, this is the simple Excel spreadsheet one. I think most of you could do this. Maybe just write it by hand. Just do a simple little journal so you keep on tracking your trades. And then even if you only do it weekly, like I'm doing today on the Saturday when the markets are closed, you can look back and think, well, okay, I haven't done so badly this week, even though I've had a few losing trades. And I say these are just example figures, they're not real figures, but it's an example of how you can today trade in general. So I hope that helps you guys. If you want to see, as I say, it's not the most exciting video, so if you want to see how I actually do trade, then pop along to a running trader, and you'll see a few more exciting videos than this. But as I say, this might be the most exciting videos, but it is an important one. So take care, guys, and I'll see you soon.